Welcome back. Now, disciplined capital allocation has translated into superior returns for PPC. The cement manufacturer says its Awaken the Giant turnaround has strengthened its competitiveness, with profitability and cash flow increasing consistently in its first half. Company CEO Matias Cardarelli joins us now for greater perspective. Matias, thanks so much for your time today. Now, it's been a while since the new leadership took over at PPC, that Awaken the Giant strategy also in full force. Just walk us through some of the key factors from that strategy that have boosted growth.
First of all, thank you very much for having me and for giving me the opportunity to share the progress we have achieved in our turnaround process in PPC. Everything starts with that organizational culture change. And that is why when we talk about the turnaround, that we call it rightly, as you mentioned, Awaken the Giant, we focus on four pillars. One was to change the cost mindset, to have a better approach in terms of cost. The second one, we call it less is more, trying to simplify the organization and standardize many of our processes. Then the third one, of course, we are an industrial company. So operational efficiencies are extremely important. So we focus a lot on our operational efficiencies and how we were driving our logistic function. And four was the commercial pillar of the turnaround. In that, we try to focus on contribution margin instead of volumes or market share at all costs. Meaning, we started to look through which channels we were getting better margins, which products were better margins, and which regions were getting better margin for us. All that combination is what is starting to transpire or started to transpire in FY25 and is continuing transpiring now.
And just on margins, Matias, PPC has been quite deliberate when it comes to protecting margins and this over gaining market share. Talk to me about the strategic thinking behind that approach, considering how competitive the industry you're in.
Because it's very important for any cement company to have healthy margins. Because as a capital-intensive company, you need to invest in maintenance, we need to invest in technology. So if you have poor margins, down the road, you are going to have serious financial problems. That is what happened to PPC in the past. So we have a strong commitment of protecting those margins. As you can see, this first half of the fiscal year 26, we are operating the South African cement business at 17.1 EBITDA margin. When in the past, even at certain time, PPC some years ago was operating in one-digit EBITDA margin. Of course, if you are a cement company or you are in industrial companies and you are not paying attention to margin, this is the beginning of the end. So we engage with customers. We, of course, align our teams, understanding that our goal would never be to sell at any cost or to sell with very low margins, because although that could bring some short-term wins, down the road was going to be very, very complicated for the company.
It does have long-term effects on the balance sheet. Now, talking about efficiencies, which is one of the pillars under the Awaken the Giant strategy, how much further can the efficiency drive go, whether it's cost discipline or capacity investments, especially in, a challenging macroeconomic environment?
Well, we have still a lot of room for improvements. I mean, we call it our efficiency program. We call it the Plant Performance Improvement Plan. It's a 3-year plan that is just almost in the beginning. I mean, we are increasing the production of clinker and cement in our integrated plant. We are reducing clinker factor, which has two effects. One, of course, reducing variable costs, but the other one also reducing CO2 emission. And we have improved 3 percentage points our OEE indicator in our kilns, in our clinker kilns. As you all for sure know also, we are building a new cement plant in the Western Cape, which also is going to bring a lot of efficiency, cost saving, and reducing our CO2 emissions. So the whole improvement plan, I would say that if we divided our turnaround in 4 chapters, we are only in the second one. There is still a lot of room for improvement, And we are very confident that we are going to be able to achieve that.
All right, so we are at the halfway mark of that turnaround strategy. Just on growth, as I touched on, the tough macroeconomic environment, what trends are you seeing when it comes to fixed capital investment, particularly here at home in South Africa, with government emphasizing infrastructure-led growth? Has that started filtering through to cement demand?
Oh, well, allow me to start saying that the whole turnaround process, the whole turnaround plan is not based on macroeconomic growth.
Yes.
So the guidance we have given to the markets, the EBITDA growth we are seeing, the EBITDA margin we are seeing, the cash flow generation increase we are seeing, the ROIC improvements that we are getting, all the plan and what currently is happening is besides what is going to happen with the economy.
Okay.
But I'm not escaping from your questions. What I'm starting to see, what we are starting to see is some pockets of growth, especially in the Western Cape, Mpumalanga, and Limpopo, both coming from public sector and private sector. Is still at the speed and with the size that we would like to see? No. But we are starting to see good things happening. Our order book, especially in our ready-mix business, in the second quarter of the fiscal year, the third quarter of the calendar year is starting to look better. We are starting to see some, from the public sector, some roads construction. We are seeing from the private sector some residential projects. So we are starting to see good things. So we would like to say that we are cautiously optimistic that finally this very negative cycle in terms of construction is starting to turn.
I mean, that's really good to hear, to know that sentiment is starting to shift. Matias, let's leave it there. Thanks so much for your time and sharing your insights with us today. Now, that was Matias Cardarelli, CEO of PPC.